So everyone's peak Bitcoin versus ETH right now. But then there's the magic of the ETF, and people are so predictable. So right now, everyone's front running the Bitcoin ETF. And exactly as you say, Ovi, the next thing that's going to happen, the moment that that is out, it'll be the ETH ETF is coming.
Yep.
And all of that capital that was front running that will just be washed into the ETH trade, which will hypercharge that wedge and kicks off towards the summer.
Today, Real Vision CEO Raoul Pal discusses his prediction for the last part of 2023 and why his investment portfolio is stacked with big bets. He talks about why he's bullish on crypto and who he considers the fastest horse in the race. Pal has primary allocations in top sectors in the market, placing confidence in their ability to thrive amid the ongoing global currency debasement orchestrated by central banks. Pal emphasizes the significance of the devaluing US dollar we're seeing now and views Bitcoin as a key player in this evolving ecosystem. He anticipates we won't see a second bear market leg, instead emphasizing this will only be minor corrections and short-term scares. For him, the perfect time frame to invest is when the economy enters a recovery phase, when asset prices stabilize and inflation declines. Let's get right into the latest interview with Raoul Pal as he gives his market prediction for crypto and stocks for 2023 and what the economy can expect moving into the last half of the year. Also, we have just partnered with our friends over at Jamie Tree Finance, who have just launched a daily 5-minute crypto newsletter. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part, it's absolutely free. So to give out as much value to you as possible, we're sending out a 5-minute daily newsletter which will cover expert predictions, breakdowns of on-chain crypto data, and any breaking news that you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 5,000 others in becoming a better crypto investor right now.
I had a very small position, that $180 position, that was a FOMO position at the time. But really, I started buying in June and October last year. And the reason being is I started looking a lot at the ratios between Solana and ETH, the Solana chart itself. And I started thinking, okay, this is actually interesting. This looks to me like we're going to see, I haven't shown the longer term chart, but it's like this wedge pattern. I thought, this looks like this might be the token. And then I see everybody talking about it as the Sam coin, blah, 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 down 97.5%. I'm like, this is Ethereum from the previous cycle. And so I've been watching it and watching it. I added and added. And then I've been looking at these longer term charts thinking, what is the story I'm missing? I often start with a chart and then try and figure out what the hell is going on. And look, I saw the compressed NFTs. I think that's a very, very big deal. It's all about, ticketing and all of those use cases. You can see, it's a good, fast chain, lots of community, lots of builders. So it's like, okay, this is great. They're good, high quality people. Tolly is one of the best people in the entire space, I think. But really, I was at Mainnet in New York a few weeks ago, and I heard Colleen Sullivan from Brevin Howard, is a friend of mine, talking about fire dancers. Just dropped into the conversation when she was on stage. I'm like, don't know what that is. I ignored it because she knows a lot more than me, so I just assumed it was something wonky. And then Tolly was on stage talking about fire dancer, and he dropped the thing, oh yeah, Jump Trading have been building this validator, and it's working out at somewhere between 600,000 and 1.2 million TPS. I was like, are you kidding me? So anyway, I went back and I was writing Global Macro Investor with Julian Bittle, and we were on some Zoom call just chatting about stuff, and we were looking at these Solana charts again, thinking, this is breaking out. What the hell is going on? So I went down the fire dancer rabbit hole, and I'm like, oh, okay. What is being built is like the new Solana. I asked Tolly about it publicly on Twitter. When's this coming? It's like, we think it's going to get on testnet by year end, mainnet by the summer. And it's like a total step change of anything that's ever happened in the space in terms of transaction speed and cost. And it increases the security of the Solana SVM as opposed to the Solana virtual machine. So the macro picture is, and we all talked about this on the conversation we had with Real Vision recently, is like, it's the same risk curve as the financial markets. Crypto spring is like spring in the macroeconomy. Generally, it's a bonds driven. In the credit markets will be treasury bonds. And in crypto, it's Bitcoin. So Bitcoin always outperforms at this point And then what happens as you start to get into late spring, which is where I think we are now, where we transition towards summer, is you start to see the alts rising.
Yep.
And then we'll see, and we're right at the bottom of that massive ETH Bitcoin wedge. And we're getting all the demark signals and all of the things that we should be getting that should start leading to the ETH outperformance, which I think will happen, but just because of the network effects of ETH, because of how it's constructed versus Bitcoin. So everyone's peak Bitcoin versus ETH right now. But then there's the magic of the ETF, and people are so predictable. So right now, everyone's front running the Bitcoin ETF. And exactly as you say, Ovi, the next thing that's going to happen, the moment that that is out, it'll be the ETH ETF is coming.
Yep.
And all of that capital that was front running that will just be washed into the ETH trade, which will hypercharge that wedge and kicks off towards the summer, the crypto summer. So it's kind of like I'm wryly observing it because you kind of know how it's going to play out. So what we should see, I like to see those things too. You guys all know it when the market is like this, looking to go higher, and there's a massive call seller out there. What happens is it just forces this massive short covering of those positions, or the covering of their delta, and it explodes through in price, which is actually what happened in Bitcoin. There was a bunch of calls out there that were short as well. So yeah, it's setting itself up perfectly for ETH poking everybody in the eye to say, don't forget about me.
Embracing an unyielding enthusiasm for the crypto realm, Raoul confidently predicts that explosive growth is looming on the horizon, as BlackRock and many other crypto giants are doing just that. Pal reassures that a long-expected surge awaits, leading up to the highly anticipated 2024 halving event for Bitcoin.
Basically, to understand the game we're playing is GDP is driven by population growth, productivity growth, and debt growth. The issue is population growth, that's the US, been declining. Working age population is declining. Productivity is declining, and debt has tapped out. That's debt to GDP. So we're like at enormous levels of total debt to GDP. We've got no engines of growth. GDP is what pays the bills. It was what pays the interest on the debt. And trend rate of growth has been falling over time. So this is the big picture view. 2008, some magic happened. The magic was the debt jubilee. The debt jubilee was when the world blew up, when every major economy started to get to 100% of GDP in debt at government level, ignoring the private sector level. Basically, there's not enough GDP to pay for all of the interest payments on the debt. And what they did was this debt jubilee, which was like, you don't need to pay your interest. It's now zero, right? Everybody got given that gift in 2008, 9, 10, 11, 12, 13, 14, 15. So that whole period, everybody reset all of their debts to a 3 to 5 year debt cycle. And that funding cycle is now the thing that drives everything. And I'll show you some more on this. And this is only a part of the everything code, but it's part of this whole idea. It also happens to correspond with the Bitcoin halving cycle, and it corresponds with the US election cycle. They're all the same thing. Everything is one cycle right now. And if you understand that cycle, you kind of understand everything. And it will get broken at some point, but to break that cycle needs population growth to change, productivity growth to change, or debt growth to change. If not, we're in this cycle. The population growth is what I think does change, because AI and robots are productive units that basically replace people in the workforce, and they're now and will become infinitely scalable. It's not yet, but by 2030, 2032, something like that, this is infinitely scalable people in terms of productive units. That changes the entire equation for mankind, changes productivity, everything else. So going on to the next chart, the cyclicality here is, here's the ISM, and the ISM 22 months ago is the ISM today inverted. It's because everything has become this incredible cyclicality, which tells us we're at the bottom of the business cycle right now, the recession point, and we're starting to go higher. Now, ISM leads GDP by a quarter, because it's monthly and GDP is quarterly. And so what we're saying is around a month ago, or 2 months ago, we were at the low of the business cycle, which is why we should see a recessionary quarter. Our weekly leading ISM index also pointing to the business cycle higher, which is the picture that I'm trying to get across for 2024, which is recovering economy, falling inflation, is really what is known as macro summer and crypto summer. That is the holy grail. That is the one where you start to make the real money. And that's coming, and we're very close to it. Usually, you need the ISM to cross up back up through 50 for that to be confirmed, and that's when things start to get a little crazy.
Pal's analysis brings attention to the liquidity cycle as a valuable indicator for understanding debasement, signifying a shift in the market's direction. He identifies a crucial turning point in June, where his weekly liquidity index hit its lowest mark. This prompted him to focus on purchasing Ethereum. Pal also acknowledges the divergence between liquidity and asset prices, emphasizing that during bull cycles driven by adoption and speculation, cryptocurrencies tend to outperform liquidity measures. Based on his findings, Raoul Pal strongly advocates for the strategic investment in cryptocurrencies, specifically highlighting Bitcoin and Ether as promising assets. He sees them as assets that surpass the performance of traditional financial institutions' balance sheets and provide a means of protection against currency debasement and the inherent flaws of the current financial system. What is your opinion on Raoul Pal's claim that investing in cryptocurrencies like Bitcoin and Ether serves as a smart hedge against currency debasement? Let us know in the comments below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this.